What's up, everybody? This is Jimmy with Decoded. It is October 17th, 2024. I don't know why I keep getting caught up with the October. 4 o'clock in the afternoon. The market is closed, and I've been off since, 1 o'clock. Why? Because we had such a great morning that everybody in the community gave me the rest of the day off. So thank you guys for that. With that said, today was interesting. Today was fun, and it got a lot more fun after the bell. Let's just launch a chart and see what we did today. So in the morning, we were way above where we had closed yesterday. And in relation to where after hours closed last night and where we opened this morning, sizable gap. But the pink line here was yesterday's high of day. Okay. As you could see, we were well above that when we started charting at 8:30 this morning, and we quickly got out of our pre-market area at all-time highs, all the things. So the market was pretty happy today based on chips news, right, in the tech industry. Two things happened today that were a little bit surprising to me. Number one, I expected ADD to open very green. I don't look at small caps individually or as a sector because they don't really matter to me. ADD tells me what small caps is likely doing. So when we opened this morning, I was looking in the plus 1,000 range for ADD. I couldn't find it. ADD opened at basically 200 and was falling out of the sky since the open. Qs at the open also opening very happy this morning, dumped like crazy, and SPY was dumping like crazy. But before we get ahead of ourselves here, let me explain to you what I was saying to the people in our community. Now, every line above the pre-market area was lines that I drew not having any point of reference, okay? Somehow they were still pretty accurate, right? I mean, we used it as resistance. And again, I drew these at 8:30, so it wasn't long before we hit resistance here. But 8:30, we pulled back. We stayed in the pre-market range, got out. This time we broke out of higher lows, bad for resistance usually. And we moved straight up to my next target high. Now, this was as high as we got for the day. Everything as far as tech and SPY was very, very green in the morning. And we were going to be, at this time, opening at all-time highs. This is not my favorite scenario. Leading up to the point of open, so while we were still printing our way up to these levels here, I was telling everybody, guys, market's pretty happy. Qs have a long way to go before they hit their all-time high, so that's what we're going to have to use to determine what SPY is likely to do, how high it can go. We weren't looking for puts. Now, my suggestion is if you, like me, I don't like playing all-time highs. I really don't. I'm not opposed to the market being up here. It's just I don't feel comfortable buying calls when we're up here. But that doesn't mean you should be taking puts instead unless there's a reason to do so, okay? Before this started to happen here, there was no reason to even consider puts. Now, if you watch my channel or if you're in my community, you know what my criteria is for switching from calls to puts and puts to calls. It's not a complicated situation, right? I am playing for minutes at a time, not days, not hours, right? So when we look at the day, it's very clear that the market, as far as AD or Qs and SPY, were green, no doubt. But when we start to make shifts, even if they're temporary, that on a shorter time frame basis, this is all that it takes to change my mind from one way to the other. We'll see calls and puts in this chart that we talked about, okay? But when it comes to playing aggressively in the morning, opening at or near all-time highs, when I've got no point of reference to where it might go, that's very uneasy and uncomfortable for me. So I'm a lot more hesitant to play calls at that time. That said, we had a call line, we had a put line. just like we do any other day of the week. If we were going to get into calls, there was 2 criteria we needed to do to get into it, and there's a reason that we were waiting for 2. If we were getting into puts, then there's a criteria we needed to see in order to do it. And if we cross or make those criteria true, we take the resulting trade, okay? Our personal feelings shouldn't play a role in the technicals. They do. I'm not arguing that. For me, they do. In this case, I was going to have a difficult time playing calls unless ADD was pushing up, unless Qs were pushing up. I wouldn't have a target on SPY. I would just have to say, hey, everything else in the market's going up. SPY's at all-time highs. Why leave the money on the table? You got to be willing to take the risk even if you don't feel like it's the right thing to do. Now, if you're uncomfortable enough and it's going to create hesitation in your trades, don't take the trade. Okay? I'm just telling you how I feel and how I felt this morning. With that said, and thankfully, we were talking about calls up to this point, okay? And then, for me, this is a good thing. We start putting in lower highs. Now, that doesn't mean immediately on open we jump into puts, okay? But when I'm coming up with my trade plan for the morning, whether you agree with it or not, that's up to you, is lower highs are bad for calls. I would say this whether it was in pre-market, whether it was an hour into the day, whether it was 5 hours into the day. Lower highs are bad for calls. I do not buy calls at a time we're coming off of lower highs. It's just a rule of mine. It always has been. It's never changed. If you know, you know. So first, we should be looking for calls. But here's what we'd want to see in order to justify taking those calls, or here's my rule. Number 1, I want to close above the downtrend line. Number 2, I want to make sure that after that close, we can take out at least one resistance to the left after doing so. So in this case, we'd want to close above the red trend line, which we never did. We did in pre-market, not in regular hours. And number 2, I wanted to see a candle close above this resistance area right here. And even then, you got to say, is the move from 586.03 to 586.28, which is where the next target was, enough to make money? For me, the answer is no. It's not 20 cents. And it would have a lot to do with whether Qs and or ADD were also moving up. Okay, if they're going down and SPY is struggling to move up, there's no chance I'm taking those calls. Okay, because the way I look at ADD and the Qs is that's telling me if small caps are going down and tech is going down, SPY's going to be right behind it, if not already doing it. Okay, now, so for the open this morning, we were prepared in advance for puts. What was the criteria to get into puts, you might ask? Well, we had criteria number 1 was already true, lower highs. We were recognizing this as a counter trend trade. Now that's important because a counter trend trade, I always tell people, if you're going to get into a counter trend trade, make sure you be prepared to get out at the very next level of support, in this case, because we're going down, to take your profits, right? We don't want to believe that this is just the start of a full reversal. We don't know that yet. So what we're looking for is a break of support and having it move down to the next support. That's it. That was the original plan. That was the original rules that we were going to follow. It's the rules we follow all the time. This opening candle, if you were watching, kind of went down very quickly, green very quickly, and then it kind of stuttered in this area for a good portion of time. While that was happening, Qs were free falling, at least on the very first candle, big red candle. And ADD opened way lower than I thought it was, but struggling to move higher, in fact, pushing lower. So we got into puts. We got into puts at that time, okay? Originally, we were looking for a 40-cent move. We wanted to break this support and head down to the next support, which is right here. That's why this circle is here. Now, the beauty of this is that when we were in this trade, the A+ setup had ended up becoming the case, meaning Qs started trending down, ADD started trending down, and momentum was carrying us down. So when we got near our 40-cent mark, momentum picked up graciously, and we busted right through it. Now, my rule is if I'm in a trade, calls or puts, especially if we're trending up or down, like in this case, down, and we close below support, I believe that we are more likely to reach down to the next support before we start to, if at all, rotate in the opposite direction. If we don't, so we closed below this support, if we don't, that support becomes my new stop loss. So if we would have stopped moving down here and we pulled back up and got beyond this point to the upside, you stop out of the trade. So the plan was get in when we breach the put line, get out. Now, if we would have slowly grinded our way down to that point, we would have taken profits there, okay? Because there was clear buyers trying to hold this up. They weren't successful, thankfully. And we blew through our support and we closed below another one. The next one down was right here, so I wasn't even worried about it there. We closed below the blue line. Okay, great. Let's see if we can make it to the next blue line. Yeah, we did. We closed below that one too. Let's see if we can make it through the yellow. So on and so forth. We kept breaking support levels on the way down. But then we abruptly hit a level where we were struggling to move lower. We noticed it on the Qs. We noticed it on SPY. But as we were nearing this orange line on the Qs, and ADD at the time started to print some green candles shortly thereafter, I said, guys, this might be the end of the move. We don't know. It's showing enough weakness now that I would put a stop loss somewhere in profit at this point, deep in profit, hope for the best, plan for the worst. So if you got in up here and you held it to anywhere down here, very likely you had a 90+% return. My trade was 133.9%. Wasn't my biggest winning trade by far. It was one of my highest percentage wins, but dollar-wise, it wasn't as big as ones that have paid me much better on lower percentage moves. Okay, but that's not the point. The point was this went from a good planned trade to an amazing trade that worked out the way you dream it would if all the cards fall in your favor. Okay, so we got to get into the trade because of technical criteria that we follow all the time. We got to stay in the trade because momentum from Qs and ADD were in our favor. It turned into a good yet semi-risky counter trend trade into an amazing A+ setup trade. Beautiful day. By 10 o'clock in the morning, our poll, we had two or three reds to like 90 greens or 60 greens, something. It was a ridiculous ratio. It was amazing. And a lot of people were done by the time we got down here. Okay. Now, I'll say that to say this. There are some people who didn't execute, who didn't get into this trade, and that's okay. If you didn't like the setup, understandable. We were pretty green in pre-market until we weren't. Okay. We move down, we find a bottom for the time being. We start to put in higher lows. Okay, so Jimmy, when would you buy puts? I wouldn't, because we're putting in higher lows. That usually means resistances are more likely to fail, not hold. That's a rule. Again, you watch my videos, you hear these things all day. This is not bullshit, guys. This is what I preach all day long in the community while these are printing. Jimmy, when would you buy puts? I wouldn't. We've got ADD going up now, aggressively, mind you. So this recovery started to look like we've seen so many times, V-shaped recovery. So I said, man, I know Qs and SPY are pulling back to resistance at the same time, but ADD seems to be pretty aggressively moving up. I would have a hard time buying puts here. Thankfully, I don't think many people did, because higher lows, bad for puts. We broke through it, not hugely, but we broke through it. We were still putting in higher lows. And then at some point, you'll look for the same criteria. Just like we were looking for reasons to get into calls here if we broke above that trend line and closed above support. Two criteria. You want to be looking for the same thing for the downside if you're looking from calls to puts. So we're putting in higher lows. Now, I don't know about you, but after an aggressive move down, calls become infinitely harder to trust. Okay, that's a me thing, maybe. I know it's a bunch of people in my community thing too, because I ask them. Okay, I want to make sure that I'm not the only crazy one. However, 2 criteria. You want to wait for a close below the trend line. Okay, we get that here. Does that mean puts automatically? No. For some people it does, but if you're trying to be conservative, it's not a go. We do have people who play that as their entry point. Okay, aggressive traders, yeah, I get it. You're coming off resistance, okay? Qs, we're coming off of an area of resistance. You want to break the trend line, and in my rule says you want to take out the most recent support to the left after doing so. Well, that is right here, this yellow line. Now, not just because there's a line there, but because we made an attempt to come lower here. We couldn't. Buyers pushed us up. That's a line of support. Well, we broke that support. And we closed below the next support. So whether you got in because you were waiting to get in for the breach of that line, or you waited for all of these little support levels to fail and we closed below that one, your next target down is right here. If you get through that one, well, we know where our next target down is because, well, there's lines there to show you where that is. So as we near this level of support, if you want to stay in the trade, you simply put your stop loss somewhere in profit and break even at least, and then hope that we continue down. And if we don't, you stop out with something. Okay? Likewise, coming off of lower highs, we're expecting this little mini support to fail. Now, this isn't a big move down, but you could have gotten in aggressively because of the lower highs. Trending down, we're expecting support to fail, not hold. 583.20-ish to the pink line, 582.83. It's about a 40-cent move. Okay, yes, there's money to be made there if you're willing to take the risk. I mean, we were hoping for, that's why you see the alert there, for a gap close. We got it. I didn't think we were going to get it today, but we asked Steve for a favor and he took the long way to get there, but we got there. As you can see, we touched it basically to the penny. Come back off of it. Now, the same criteria we used to go from puts to calls, even though we didn't get calls here, and from calls to puts, we can implement the same mentality here. However you want to draw your lines, okay, whatever the case is, you want to come across this one and go here. But I would prefer to touch more candles than less, okay? Maybe you could do it from here, whatever you want to do, okay? Point is, you're looking for 2 criteria. We're trending down, coming off of a higher low, so we shouldn't expect this to hold this time. We should expect it to fail. We close above it on this candle, so we get outside of the trend line, and we close above the most recent resistance to the left. What should we expect to happen next? Well, we look left for the next resistance. That's right here. And if we got through that, we would be hoping for the next resistance. This doesn't work 100% of the time, but if you wait for these things to happen, your odds of winning the trade become much better. Okay? So we closed above it. We struggled to stay above it, struggled to move from here. Okay, now in this case, you would want to stay above the most recent support we created, which is these guys right here. So we never came in danger of that. And then we were aiming. We were talking about this before it was a thing. While this was happening, I said, guys, we close above this, we'd be looking for SPY to run up to 584.18. Thankfully, some people believe in the process. They took their calls, and we went up there. Took a couple minutes to get started, but it did. It got through that, and it didn't make it to the next resistance. Okay? But if you waited to buy here, when we get to or up in profit, you have the opportunity at that point, if you want, again, this was about a 20-cent move anyway, to either take profits or pay attention to the Qs. What are the Qs doing? Are the Qs hitting levels of resistance at the same time? Are they near resistance? If they are, you don't take the trade at all. But for anybody who does, says, hey, Jimmy, we're trending up. We're putting in higher lows. We closed above resistance. Shouldn't it go up to the next one? Normally, yes. But if there's something out there that could stop it, like Qs hitting resistance or anything of that nature, it's worth taking note of that, okay? It doesn't mean it can't get there anyway. Just know where your roadblocks exist so you can avoid them if necessary, all right? But if you get into profit, let's say your trade gets up 8%, 10%, just throw a stop loss at break even. Do something to protect you from being afraid and let the thing do what it's going to do. This case, it didn't make it to that next resistance. It pulled back. You would have gotten stopped out with no loss. Okay? We pull back. We start putting in lower highs, lower lows. Same rules apply. Now, here's one I want to show you guys because there was two scenarios you could take here. You had a downtrend here. Okay? You had a downtrend here. Let's just say, now we were using the Qs at this point, trend line for this particular trade that we were talking about. Said, guys, should you be buying puts at the low of day? Not usually. You don't usually want to buy breakouts to the downside. Now, we do it often, especially if momentum is in our favor. But in this case, new low of day, we had an attempt to move higher here in Qs. Qs were on their pink line, getting closer to it. So pink line's the stink line. We don't like to mess around with the pink line very often. Okay. With that said, I'm sorry this video is getting a little longer, but there's a lot of information to go on today. Today was a very, very good chart to make good money. Okay. If you are buying the pullback to resistance, which is the best time to buy pullbacks, I want to show you guys that just because you're pulling back during a downtrend, everybody wants to know, how do you know it's not going to be how do you know it's going to be a pullback and not a reversal? Guys, you'll never know. You'll never know. That's why you're looking for confluence as much as you can from one chart to the next. Okay? If they're both pulling back to resistance during a downtrend at the same time and ADD is moving down, you got to take the risk. At least I think so. I take the risk because I'm trying to trust the chart and not my emotions. Right? Now, in this case, you would have bought a pullback to this resistance. The beauty of buying at resistance, for puts anyway, is that if you close above it, that's your stop loss. You get to have a nice tight stop. And even if that's not your stop, the most recent lower high to the left should be the point that you stop. In this case, it wasn't much beyond closing above the trend line. Okay? But you need to say, all right, well, I attempted to buy at the trend line. If we pull back to where the last batch of sellers was that allowed us to leg down farther, I'm going to give them a chance to save me. And if they fail, I have to assume it's going to move up to the next level of sellers, which is just each lower high to your left. And at some point, you're going to be down too far. So you got to know, hey, I'm going to give these guys one chance to help me. If they don't, I cut the trade for a loss. But at the same time, that also meets the criteria for calls. So if you bought puts here, you would have stopped out because we closed on the other side of the trend line. Yes, it's a losing trade. Yes, it's a small loss. Yes, it's also the opportunity on the very next candle to consider taking calls. Now, the reason it's here is because, again, we were talking about this trade going off the Qs chart. If you're going to take an entry because of the Qs, you have to get your exit because of the Qs. If you're going to trade the SPY chart, you would have waited for a pullback on this candle, hoped it would have held. If it didn't, it's also your stopping candle or the very next one. But your buy-in for this call would have been this candle if you're using the SPY chart. I rely on the Qs a lot. So if you were to draw the trend line on this Qs, okay, we broke above that line at 1106, okay, which is right here. So entry point, because we didn't know it was going to close above it. If you were buying your puts because the Qs were pulling back to some resistance, that would have been your entry candle on SPY. Okay, it closed above it and it took out on the very next candle the most recent high to its left. This is your stopping candle. So if you entered because of the Qs, you got stopped out because of the Qs. That gets you in at 1106, gets you out at 1107. But that same candle also meets the criteria for going from puts to calls. So the reason that there is a candle here and an exit here, but an entry here is for the things I just explained to you. Now, where are we expecting it to go? Well, we expect this to go up to here. We closed above resistance. We made it to the next resistance. If we closed above that, we were looking for this. We got within pennies of it. If we closed above that, we were looking for this. Closed above that, we were looking for this. Okay? This is all we do all day long. So that ended up being a winning trade if you took calls, a small losing trade if you took puts. We can't see the future. Never claimed to, never said you'll ever be able to. You won't. So when will you know it's a pullback versus a reversal? You never will. You can't, unless you can learn to see the future, which please let me know if you do learn that particular skill. Or you can say, hey, I made good money on this move down or the move up or the next move down or the next move up. And I'm just going to accept the winnings that I have and I don't have to worry about this situation anymore. Trading less, especially if your first trade's green, avoids having to worry about any of that stuff. It's kind of cool. But then again, we were looking at the Qs at 11:53. What was happening at 11:53 on the Qs? Higher lows. If we get a close above, and again, these are trades that people are asking me, Jimmy, when would you consider calls again? When would you be buying puts? I said, well, I wouldn't be buying puts because we're putting in higher lows on the Qs. But if we close above this resistance, I do believe that we'll have a move up towards this one here. If we get through that, we'd be hoping to get to this gap. Okay. So again, each one of them that we cross, move your stops up, hope that it continues to go up. If it doesn't, you'd stop out in profit. Okay. So again, we took it on the Qs. You bought calls here. Where was your stopping point, Jimmy? Well, if we close below the support here, that's where we get out. We never closed below that. We stayed above the orange line. We continued up. We made it right to and through that resistance. Okay, so since we closed above it, we move our stop up. We stay in the trade. We hope for it to move up to the next resistance. And, well, c'est la vie. It got right to where the gap is, wicked off of it, and came back down. And that was it, guys. After that, I went to lunch and came back right around 1:15. I asked everybody, hey, what do you guys want to do? And they said, call it a day. Poll's looking really good. Most people in the community already made money. Let's have a short day. I said, okay, good. Then of course, whatever happened to cause this happened, but it doesn't matter. If you're done for the day, you're done for the day. But today was fantastic for a lot of people. Not great for some others. If you didn't catch the opening move, I'm sure today was a lot more difficult than it was for people who did. Right? It's easier to walk away with a nice green trade than it is to watch what would have been an amazing green trade that you didn't take a part of. Now you're going to be stuck staring at this chart, trying to find a reason to make up for what was lost by not doing it here. I'm well aware of that feeling. I sympathize with the people who do get in that situation. It would be very difficult for me too. If I missed that move right there, I don't know that I would have comfortably taken another trade unless it was FOMO induced or an effort moment. I get frustrated when I miss moves like this. I get frustrated when I miss good trades that I'm interested in that I just hesitate on and I don't take, or if I take a red trade first, the very first thing that goes into my mind is, I got to take another trade because I don't want to be red today. That's a thing, guys. Nobody wants to end the day red, myself included. But sometimes it's better for us to take a scrape than it is to try and heal that scrape immediately, because sometimes we could turn that scrape into a festering wound in a gash that lasts forever. It'll hang with us for months to come, and that could really mess up your psyche in this business. All right. So we're going to go ahead and wrap it up. I hope you found some useful information in this video. If you did, please like, share, and subscribe. If you'd like to join our Discord community, we'd love to have you. Links down below. And that's pretty much it. So I hope you all had a fantastic day today, and till tomorrow. I love you guys. See you.